name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hello.
Thank you for joining us today as we're looking at the fundamentals on driving the markets currently. So Peter, what's new in the markets?
Well, we had the US dollar, which more or less tended to weaken. That was yesterday. Overall, though, we have to note that the bullish sentiment is still on. So for the time being, we tend to maintain a bias for a bullish outlook for the greenback.
Did RBA deliver a 50 basis point rate hike?
Actually, it did. It was more or less expected. We had mentioned that yesterday as well. The bank, in its decision, though, in Governor Lowe's accompanying statement, had mentioned that it has the intention to proceed with more rate hikes. So further tightening of its monetary policy should be expected. At the same time, though, it also mentioned that it's not on a preset rate hike path. So practically the size and the timing of future rate hikes will be data dependent. And especially it will be dependent on the outlook of inflation and the employment market. For the time being, I would be highlighting that we have a market which already prices in another 50 basis points rate hike, and that should be for the October meeting, early October. So practically the market's expectations remain rather high.
And who is the new UK Prime Minister?
Well, we had the announcement of Liz Truss yesterday as the new leader of the Conservative Party. She is to be appointed by the Queen as the new Prime Minister. Now, Liz Truss had made various promises. As we have mentioned yesterday, she was leaning more on the radical side of the Conservative Party. I would dare to say, or if you prefer, highlight that among the promises made were extensive tax cuts, some loosening of business regulations. There would be also investment zones in the UK. And let's not forget that we had also the idea of a revising of BOE's mandate. And more or less that could curtail the bank's independence towards interest rate hikes and may drive it being more focused on GDP goals rather than inflation goals. I would highlight the most recent measure which has been announced. That would be a freezing of energy costs for UK households. Now the plan as such could be up to 130 billion pounds. It's huge. And that could also have an indirect effect on inflation in the UK as well. It could lower inflation, with some analysts mentioning even circa 3% year on year up until the end of the year. So it's a big issue. And the promises made are also quite big. Definitely the market may need some time to digest the news. Overall, though, we have to note that the pound strengthened yesterday. The ending of the uncertainty in the political scene of the UK more or less provided a boost for UK pound traders, if you prefer. And it was evident that the pound strengthened against the US dollar, the euro, and JPY, in a sign of a broader strength.
And how about the US stock markets?
Well, US stock markets are to reopen after a long weekend. It's a big question how the stock markets will practically react, A, in the aftermath of the US employment report, which was released on Friday. B, on the uncertainty which seems to be surrounding Eurozone's energy crisis. And C, the news coming out of the UK, which we have just mentioned. So we have to note that US stock markets on Friday afternoon, after the release of the US employment report, tended to get some support, but after the Russians announced that there would be a natural gas supply cut through the Nord Stream 1 pipeline, US stock markets dropped, once again ending their days in the reds. I would like to see whether investors are going to be driven more by cautious sentiment, which could more or less weaken US stock markets further, or whether there's going to be a more optimistic outlook, which could send US stock markets in the greens once again.
And how about the OPEC meeting?
OPEC's meeting resulted practically in a decision to proceed with narrow production cuts. And that provided a slight boost to oil prices. But overall, I would dare to say, may not have excited traders that much, oil traders that much. It seems that within OPEC, there are some opposing forces. On the one hand, we have the Saudis, which are pushing mostly for wider production cuts in order to boost the price of oil. At the same time, though, we may be seeing the Russians, which are pushing for lower cuts in order to be able to expand their exports to the Asian customers. So it's a power struggle here, and both interests have to be combined somehow. For the time being, it seems that the middle way would be low production cuts in order to provide a slight boost to oil prices.
And what's on the calendar for the day?
Well, today I would be highlighting the US ISM non-manufacturing PMI figure. It's for August. It's expected to drop. And if actually so, could more or less weaken the US dollar, because it would be signaling practically a slowdown in the expansion of economic activity in the US services sector. The highlight, though, for tomorrow's Asian session could be Australia's GDP rate. It's for Q2. It's expected to accelerate slightly and could be providing some support for the Aussie. I would also be noting China's trade data for the same month. We have the trade balance definitely as the key figure, but in our opinion, Aussie traders may be turning their attention towards the import growth rate of China, given that Australia exports a wide amount of raw materials to China. So it would be interesting to see whether the growth rate of imports from the Chinese side has more or less accelerated on a year-on-year basis and facilitated more imports from Australia. Such a development could provide some support for the Aussie.
Any final comments, Peter?
Well, overall, it seems that the markets have started to move about with their engines after the holidays and the long weekend. And overall, there seems to be a tendency for increased volatility in the markets. It was characteristic how yesterday we had the jump of the pound, and overall the fundamentals continued to drive the markets. More or less, I would expect the US dollar to relent some of the initiative, but only after the ISM non-manufacturing PMI figure for August has been released.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
So welcome to the technical analysis part of the presentation for today. In front of your screens we have the US dollar index. It's the 4-hour chart, and for the time being, or at least every chart which will be presented is to be of the that time frame, the 4-hour charts, unless otherwise stated. Before we make a comment about the US dollar index, let's have a look at Euro USD. As you're asking, Euro USD, which seems to be in a sideways motion. It jumped a little bit higher, but overall there is a wide sideways motion. Some would call it between the 0.99 and the 1.02 resistance line. But at this point, despite that notion, I would be highlighting one element. And the element is that we have noticed the throws. We have one throw, second throw, third throw. There's one lower after the other. And that tends to imply some bearish tendencies. The same applies also with peaks. One peak, second peak, third peak. So practically we may be seeing a downward trend. For the time being though, I tend to maintain a bias for a sideways movement, and I would like to see Euro USD breaking below the S1 0.99 support line before calling in a bearish outlook. And once so, that could be a signal for the sell side of Euro USD for the time being. Once again though, I would like to see it breaking below the 0.99 before switching my outlook in favor of a bearish outlook. On the other hand, should the stabilization occur, we may see the price action breaking the just drawn downward trend line, which initiated practically, if I'm correct, on the 31st of August, and remain within the 10095 and the 0.99 levels. For a bullish outlook, I would require a clear breaking A of the prementioned downward trend line, a clear breaking of the 10095, and the pair to start actively aiming, if not even breaching, or at least testing, the 1.02 resistance level. Okay, let's have a look now at the US dollar index. US dollar index, which seems to be on the rise, but to tell you the truth, I'm not satisfied. I'm not satisfied with the levels we have set, as the price action seems to show signs of low volatility. I would like to make a readjustment here, and I would be readjusting the R1 at 110, the R2 at 111, and the R3 at 112. Similarly, I would be readjusting also the support lines at 108, and the next one would be placed practically on these peaks here. Should be around 107.20. Let's have a look. 106.80. Yeah. Let's widen this. $112. Yet we have to note here that the strengthening of the US dollar is not something which has occurred only recently in the current month, but I think it had wide implications here, and was wider or before we actually seen this chart. So allow me to drill out to the daily chart for a clearer picture. Let's readjust first 108. 106.80. Let's lock this in. Let's go have a wider look at the big picture here by drilling out to the daily chart. That's it. Slight readjustment required. Beneath these, no this, no this, no this. The only trend lines which are applicable right now, practically these two. And they tend to show us A, that there is an uptrend in the daily chart which was initiated practically on the 10th of February this year and intensified once again around the 10th, 11th of August, and it's now being tested. Let's drill down to the 4-hour chart. So we tend to maintain a bullish outlook for the US dollar index as long as it remains above the upward trend line. Mind you that the index has corrected a little bit lower and it's ready for another jump. Note that the RSI indicator has bounced on the reading of 50, corrected a little bit higher. It's currently at 58. And the distance between the upper Bollinger Band and the price action seems to allow for the US dollar index to have some room to maneuver higher. I would expect, though, the next peak of the US dollar index, should the bullish tendencies be maintained, to be above 110 and definitely above this peak here, in order to continue the higher peaks in a row, somewhere here. Similarly, the trows should be high as well. So for the time being, we maintain a bullish outlook. Should the bulls maintain control, I wouldn't be surprised to see the US dollar index rising, breaking clearly the 110 resistance line, and start actively aiming for the 111. On the other side, should the stabilization occur, most probably we may see the index breaking the upward trend line initiated since the 10th of August and remaining between the 110 resistance line and the 109 support line. Note the resistance provided here and the support provided here, and the 109 has to show a number of tests, so it seems to be quite valid. For a bearish outlook, albeit it's not in our forecast but still has to be covered, we would require a clear breaking of the upward trend line mentioned before, a clear breaking of the 109 support line, and the price action to start actively aiming for the 108. Okay, let's have a look now at cable. Cable, which jumped yet the bearish outlook here has been broken. The RSI indicator is running along the reading of 50, implying some stabilization, but there is a downward trend line guiding it. And this is more evident, I think, in the daily chart. Clear downward motion, intensifying. Practically the downward motion of cable has started once again around the 20th, 22nd of February and has started to intensify after the drop on the 11th of August. Despite the correction higher yesterday and during today's European session, we'd still maintain a bearish outlook as long as the price action of cable, let me re-enter the 4-hour chart, as long as cable's price action remains below the downward trend line incepted since the 11th of August. I wouldn't be surprised to see a stabilization, even a correction a little bit higher, but overall the bearish tendency is to remain and the pair to start dropping once again. On the other hand, definitely the fundamentals regarding the UK and Liz Truss as a new Prime Minister have still to be digested by the market, but I would expect the market to more or less come about if not tomorrow, in a couple of days. And may I remind you that the outlook of the UK economy remains quite bleak. Anyway, should the bears maintain control, I wouldn't be surprised to see the price action dropping, breaking the 1.1450 and aiming for the 1.13. On the other hand, should a stabilization occur, I wouldn't be surprised to see the price action remaining between the 1.1645 and the 1.1450. It's around the 200 pip spectrum, pretty wide, which could accommodate the price action of cable should it decide to move in a sideways manner. May I remind you that the 1.1645 used to be a support line right here, while the one now turned to a resistance line given that the price action is below it, and the 1.1450 support level has provided some support here. Should a bullish scenario play out for cable, I wouldn't be surprised to see the price action, or if you prefer, I would require the price action to rise, break the prementioned downward trend line, definitely break the 1.1645, and start actively aiming for 1.1755. Okay, let's have a look now at Safe Haven JPY, USD JPY. USD JPY, which continues to be on the rise. Small correction. It has broken the 141.50. Let's readjust and make this at 147.50. In red. And definitely now we turn, here we go. Definitely now we turn the 141.50 from a resistance line to a support line, given that the price action has moved decisively above it. Let's readjust. $147. Let's correct the labels. It's a new 24-year high for USD JPY, and definitely we are within the spectrum of a possible market intervention on behalf of the Japanese. So that's a bit of an issue which should worry traders and keep them on alert. Correct this. second resistance line being now placed at 145.50, and the final resistance line being placed at 147.50. We tend to maintain a bullish outlook for the pair as long as it remains above the upward trend line, which has started to intensify practically since the 26th of August. Yet the initial one had started on the 11th of August, which is the date where the US dollar has started to strengthen. So we maintain our bullish outlook and wouldn't be surprised to see the price action of USD/JPY aiming, if not even reaching or testing, if you prefer, the 143.50 resistance level. On the other hand, should a stabilization occur, we made the price action of the pair revolving around the 141.50, or even climbing a little bit higher and stabilizing between the 143.50 and the 141.50. Definitely at such a point we may see the price action breaking the upward trend line. For a bearish outlook, we would require a clear breaking of the 141.50, the first upward trend line, and I would require also a testing, if not even a breaking, of the 139.40, even a breaking of the upward trend line initiated since the 11th of August. Nothing less. That would be a clear sign of a bearish tendency. Note, and I want to highlight this, that the RSI indicator below the 4-hour chart has surpassed the reading of 70, implying a bullish sentiment on the one side, but on the other hand, it may be implying that the pair has reached overbought levels and is ripe for correction lower. Similar signals we're also getting from the Bollinger Bands, given that the price action has just broken above the upper Bollinger Band, so I would expect some stabilization to start taking place around the 141.50 before the price action moves any higher. We may see even a correction lower. Okay, let's have a look now at the ultra safe haven currency pair, and that would be USD/CHF. USD/CHF, which has risen, dropped, broken the intensification of the upward trend line, and bounced on the secondary upward trend line, which was initiated around the 11th of August. Let's make the readjustments here, and we may see this correcting a little bit lower. That would be around the 0.91860. At this point, I would like to see once again the validity of the second resistance and the third resistance levels. Let's have a look. Okay, so we had one here at 0.9975, which was validated here and here as well. Practically these peaks are providing the basis for the resistance levels, seem to be valid. I'm keeping them. On the other hand, though, note that the stabilization is taking place, and the RSI indicator is running just above the reading of 450. It's actually right now at 54, nearer to the level of 50 rather than 70. So there seems to be some indecisiveness on behalf of the market for the direction of USD/CHF's next leg. Some stabilization could occur. On the other hand, the bouncing of the upward trend line tends to imply that bullish sentiments are still present in the market. For the time being, and as long as the upward trend line, let me make this clear, so as long as the upward trend line initiated since the 11th of August continues to guide the pair and has not been broken, we maintain our bullish outlook, and in which case we wouldn't be surprised to see the price action rising, breaking above the 0.9860, which was tested here. That would be around the 1st to the 2nd of September, and aim for higher grounds, marking a higher peak. On the other hand, should a stabilization occur, I would expect it to remain between the 0.9860 and the 0.9785. We could make a correction lower of the S1, somewhere here, providing the support, and that would be the 0.9765. On the other hand, should the bears take over, I wouldn't be surprised to see the price action. Definitely, I would require the price action to break the upward trend line initiated since the 11th of August, break clearly the 0.9765, and test. It has to reach as low as the 0.97. Actually, a lower trough below the 0.9765 could be signaling such a bearish outlook. Okay, let's move now to commodity currencies. Making a start with USD CAD. USD CAD, which has stabilized and has moved in a sideways motion, breaking the intensification of the upward trend line initiated around the 26th or 27th, 26th of August. In my opinion, though, despite the recent stabilization, there is still some bullish tendencies which could be evident by a wider trend line initiated since the 10th of August. Let's have a look at it. Something like this, intensifying by here. So some bullish tendencies are still present. Practically here, we see a stabilization of the price action. Note the RSI indicator, which is currently at the reading of 50. So it's running along, implying a rather indecisive market. On the fundamental side, a cautious sentiment could provide further support for the USD side of the pair and hurt the commodity currency CAD side of the pair, and that could more or less cause the market to push USD CAD higher, possibly above the 1.3220. One small correction here could be made. Stabilizing the pair at 1.3205. Given the peak it has recently made, looking about 15 pips lower. So should the bulls actually maintain control, we may see the price action rising, definitely breaking the 1.3205, and that would be a prerequisite, as practically that was the latest peak of the pair. So for a bullish outlook, I would require a higher peak, somewhere here. We have higher troughs already, but we would require higher peaks, 1, 2, 3, the next one, somewhere here. Maybe even starting to aim for the 1.3350. Let's make the readjustments in the labels. A possible stabilization, which seems to be imminent. Note that the pair has corrected lower. That was since the 1st of September and seems to be stabilizing, given also that the RSI indicator remains near the reading of 50. In such a case, we may see the price action finally breaking the upward trend line, which was initiated on the, let's find the needle cross, at the 26th of August, and maintain a range-bound movement between the 1.3205 and the 1.3075. For a bearish outlook, we would require a clear breaking of the prementioned upward trend line initiated since the 26th of August, a breaking of the 1.3075 support line. It must be clear. Also, we would require clear breaking of the upward trend line initiated since the 11th of August, right here, and the pair to start aiming for the 1.2945. Mind you that tomorrow in the American session we get BOC's interest rate decision. The bank is widely expected to hike rates by 75 basis points, and market participants may start positioning themselves ahead of the release, starting even today in the American session. I wouldn't be surprised to see some volatility around the pair in the next couple of hours. Actually, 4 hours. Okay, let's have a look now at AUD-USD. AUD-USD, which dropped. We had some very narrow resistance support lines. Yet the 0.6760 seems to be confirmed. Once again, though, I would highlight that we have a sideways motion of AUD-USD between the 0.6760 support line and the 0.6842 R2 resistance level. The price action seems to be revolving around the 0.68 resistance level right now. So we maintain a bias for sideways movement between the R2 and the S1, with a midpoint being the R1 for the time being. For a bearish outlook, we would require a clear breaking of the 0.6760 and the price action to reach, if not even breach, the 0.6710. Mind you that the price action is currently testing the lower Bollinger Band, which may slow down a bit the downward motion. On the other hand, though, we have to note that the RSI indicator is at the reading of 40, which may be implying a slight bearish sentiment on behalf of the market. A possible stabilization may be maintained once again between the R2 and the S1 should the price action actually bounce in the S1. Mind you, the mid-level at 0.68. Don't forget that. On the other hand, a bullish outlook. Now, for a bullish outlook, we would require A, the breaking of the 0.68 mid-level, B, the breaking of the 0.6840, and I would also require clear breaking of the R3 0.6880 resistance level. That could push the price action higher up until here, and that would be a little bit higher. You can see the test. That would be the 0.6955. Okay, let's have a look at the Kiwi and the USD, which has been dropping, but there is a slight catch here. There's a downward trend line. Note though that the latest show seems to be higher than the prior one, So we may be discussing here a possible stabilization of the pair. I would like to see, there's a clear downward trend line, yes I know, and that drives me towards a bearish outlook for the pair. Also the RSI indicator, which is quite below the reading of 50, actually 40 something. Let's have a look. It's currently at 42. Tends to imply also such a bearish outlook. Yet I would like to see a true below this level here. Somewhere here. It would make me feel far more confident about my bearish outlook. Okay, let's have a look at this and find new support lines, a little bit wider this time. Pretty low. Let's drill out to the daily chart. 4 chart? Nope. We have to stick to the daily chart. And that could imply that there is seemingly a mid-level somewhere here. Note this true here and another one here. I'm keeping these two. And that would be green 0.5910. Would like this one. Note how the price action, while it was on the rise, dropped, stabilized somewhere here, rose again, rose higher, once again dropped, tested this level once again, and rose higher to move on. This could be also possible mid-level, but I think this one's more valid. That would be the 0.5790. Forward chart, drilling in, readjusting. Let's readjust the labels as well. Okay, making a start with the S3, which is now being placed at 0.6350. Second resistance line being placed at 0.62. First resistance line being placed at 0.60. Let me have a look at this. 0.6095. First support line being placed now at 0.5990. Second support line being placed at 0.5910. And third support line being placed at 0.57 and 90. With a downward motion, some stabilization seems to be in play. Should the bears maintain control, I wouldn't be surprised to see the next show being lower than this one, practically aiming for 0.5990. A stabilization could occur. Note how the price action of Kiwi against the US dollar has been revolving around the 0.6095 level, currently a resistance level. So I would expect it to maintain that sideways motion, breaking the downward trend line initiated around the 26th of August. On the other hand, a bullish outlook, we would require a breaking of the 0.6095, a breaking of the pre-mentioned downward trend line. Definitely the price action has to reach 0.62 in order to start forming higher troughs and higher peaks. Let's have a look now at USD/TRY. Nothing much. The price action moves upwards, yet seems to be finding some resistance at the 1822.60. I can make the readjustments of the labels. But in our opinion, we may continue to see slight bullish tendencies given the US dollar strengthening and the TRY weakening on the other hand, which could drive the price action higher, breaking the 18.2260 and start slowly but steadily aiming for the 1846.25. A look at gold's price. Gold, which seems to have some bullish tendencies despite the correction lower. Let's have a look at it. Yeah, could be present. No, something like this. On the other hand, though, we have to note that the RSI indicator dived just below the reading of 50. So that may imply some bearish tendencies on the fundamental level. Should the price action remain rather stable around the 1713 resistance line, I wouldn't be surprised to see it revolving around it. And a bearish outlook could drive gold's price as low as 1680 as a first stop. Interesting. Let's have a look now at WTI. That would be the last chart for today. WTI's price, which has dropped, breaking the 87.20, but for me, that's nothing. For the time being, we still maintain a bias for sideways motion with the price action possibly revolving around the 87.20. Definitely, the drop of the latest candlestick would imply a breaking of the slight upward movement which was evident yesterday and on Friday. I wouldn't be surprised to see it revolving around the S1. A bearish outlook, we would require the price action to start aiming for the 82.60 support level. What could be of interest and significance, in my opinion, would be the RSI indicator. The RSI indicator below the 4-hour chart of the commodity, it's currently at 37 and dropping. And that tends to imply increased bearish sentiment on behalf of the market, as the RSI indicator is aiming for the reading of 30, which may imply further bearish tendencies for the price action as well, testing possibly the 82.60. In case of a reversal, mind you that our outlook currently is for sideways movement with bearish tendencies. Should the price action move decisively higher, we may see it breaking the 87.20 support line. Nevertheless, now turn to resistance and start aiming for the 92.60 resistance level. That should sum it up from all of us here at IronFX. From all of us here, best wishes for solid trading.
my name is Christina, and in our previous videos we looked at the Federal Reserve, the Bank of England, the European Central Bank and the International Monetary Fund. Today we will look at the World Bank and the role it plays. The World Bank is one of the world's most powerful institutions with a total portfolio of almost $400 billion. It is one of the world's largest resources of funding for developing countries with 189 member countries. The World Bank was formed after the World War II to help countries destroyed by the war. It was established to try to help with the reconstruction and development of these countries, as well as to reduce global poverty. The goal of the bank was to provide temporary loans to low-income countries. Since it was set up, the World Bank has funded more than 13,500 development projects. The mission of the World Bank is to end extreme poverty and to promote shared prosperity. After the war, the main focus shifted from reconstruction to development of countries in areas such as roads, electrical infrastructure, and irrigation systems. Basically, the World Bank and the International Monetary Fund were both created as part of the Bretton Woods Agreement. The World Bank Group consists of 5 international organizations. When people refer to the World Bank rather than the group, they're most probably just referring to 2 of these, the IBRD and the IDA. The IBRD, the International Bank of Reconstruction and Development, offers an invaluable service for poverty-stricken countries. It would be very difficult for these countries to get a traditional loan, but the World Bank can help by providing loans with low interest rates. The IDA, the International Development Association, works with the poorest countries. To be in this group, the country must have an average income per person below $885 per year. The countries in this group can receive interest-free loans or grants and may not have to start repayments until 10 years after the loan has been issued. The other 3 agencies out of the 5 in the World Bank Group are not so well known. These include the International Finance Corporation. This promotes growth through financing private sector investment. The Multinational Investment Guarantee Agency. This helps to promote foreign investment by protecting investors from losses through guarantees. And the International Center of Settlement of Investment Disputes. This deals with disputes between foreign investors and host countries. Hope you found this video interesting and learned some useful info about the World Bank. Thank you for watching.
Okay, all right. I see a couple of you guys streaming in. Natalia, Marky, Joffrey. Nice to see you guys here, nice and early. Right. It's a fun session today. Guys. I want to encourage you to. We have a chat panel over here, right? So we have a chat panel which you can try to use. Hey, good day to you, to Joffrey. Right. Yeah. So yeah, there's a chat panel, right? I'm not sure if you guys can see it. Right. So yeah, you can just send your messages, send your questions in there. Right. Just let me type to everyone. Yo. All right. Yeah. You can send your messages there. Right. That is the place where I can not only your messages, but your questions so that I can answer them along the way. Right. Today will be a pretty exciting topic, right? It's on support and resistance, which forms the foundation of all of our trading strategies, right? Support and resistance, right? There are the right ways to do it and there are the wrong ways to do it, right? So in today's session, we're going to show you some of the ways that I've used over the years, right, to trade very profitably, right, in combination with a couple of like other forms of analysis. But support and resistance by itself is always my main one. It's always my my go-to approach, right? So I need good support and resistance before I can even trade. Okay, nice to see you tune in, Edwin. Right, welcome to the webinar. Right, welcome to the webinar. Right, so yep. once again, I want to encourage you guys, anytime you got questions, just send it in. Send it right through. I'll do my best to answer them. Okay. Now let's begin today's session. Right. So as usual, right, this webinar is brought to you by IronFX. Right. Couple of things that you need to take note is this, of course, is the risk warning and the disclaimer that this webinar is purely educational in nature. So nothing in this webinar should be construed as investment or trading advice. Please do your own little due diligence before you guys trade, okay? Now, I think I can still see a couple of people streaming in, right? And yeah, let's begin. Let's begin, all right? So for those of you guys who are here for the first time, you might be wondering, who is this dude over here, right? Who is doing the webinar, right? So this is a younger version of myself. My name is Desmond Leong. I'm an external analyst over here at IronFX, right? So I also run the award-winning research firm Everest Fortune Group, right? So we are Best FX Research 2019, 2020, 2021, and finalists for Best Equity 2020 and 2021. Strong team of traders, strong team of prop traders, right? So if there's any word of encouragement I share with you guys is that I'm a young guy, right? I'm just barely 32 years old, right? And I trade full time, right? So I want to encourage you that, you know, you don't need to be 30 years in Bloomberg or 30 years in trading to be a good trader. You just need to learn the right stuff, right? Learn the right stuff, you can be a good trader, right? So that's what we are dedicated to bringing you here at IronFX. You know, we're going to bring you the highest grade education. I would dare even say institutional grade education, stuff that you don't find on Baby Pips, stuff that you don't find on Forex Factory, right? So my research firm, you know, we usually advise the banks, the brokers, the hedge funds on where the markets are heading, right? But we have this special partnership with IronFX to bring you guys the good stuff, or the stuff that will take care of trading really to the next level. Okay, so take this opportunity that anytime you guys have questions, just ask me right away. Just send it through. I literally have another screen that is open over here, watching for the questions. Okay, now let's move on from here. Okay, Tony, nice to see you tune in too. Nice and early, right? Our agenda for today, we're going to touch on a couple of key things, right? Swing highs, swing lows, right? How to do them correctly, right? Pullback, support, and resistance. If you have time, we try to look at trend lines. I'll be showing you some about the probability, how to improve the probability of your setups. Okay, I'll be showing you how to improve the probability of your setups after that. All right, now let's move on to the next one. When it comes to swing highs and swing lows, right? What you are looking for, right? What you're looking for is what I call significant swings. Okay, significant swings. So significant swings, when you're looking at a chart, right? Looking at a chart, you're looking for these levels which are very significant. Okay, because the more significant it is, the more effective it's going to be. Many times when people trade, right? They look at they see small little movements and they place too big of an emphasis on it. All right, they see small little movements and they place too big of an emphasis on it. What do I mean by that? Right, like this is what I mean. This is the wrong way, right? So you look at these small little movements and you place too much emphasis on the small little fluctuations, right? So this is an example of drawing support and resistance wrongly. Okay, this is an example of drawing support and resistance wrongly. You're placing too big an emphasis on the small, insignificant movements. And of course, I'll be touching this Fibonacci maybe in the next couple of webinars, right, where we're teaching you very advanced approaches to trading. But the important thing is that, right, when you draw swing highs and swing lows, what you're looking for is very significant levels, like you can see, significant movements. Now, I do want to show you, I do want to take this opportunity to maybe show you some examples here. Okay, if you guys have happen to have a chart request you'd like me to take a look at, let me know. Maybe I can even analyze it live with you guys, right? But yeah, so let's just take a look at this. Okay, I was looking at a big call on Bitcoin, but let me show you what I mean by a significant level. If you're looking at Bitcoin over here, okay, what are the significant levels we're looking at, right? We're looking at this. Oh, sorry. This is a nice significant level. This is pretty significant. This is not so much. This is a tiny movement over here, right? You got a big movement over here. You got a big movement over here. Got a big movement over here. Maybe you can consider this as a nice movement, but you can consider this nice movement coming down. So these are the key levels that I usually take a look at right away. When you have established these levels, then you can start drawing. I like to put like nice horizontal lines over there. So I put a nice line over here, right? I'll put a nice line over here, put a nice line over here, put a nice line probably over here. So you start highlighting the key levels first. Okay, start highlighting the key levels. And what do we notice is that, for example, here, very nice support level where price is revisiting, right? I will explain the psychology of this thing. Is called a pullback support that we're looking at. There's a certain psychology to it, which I'll be explaining to you in a moment, right? Nice to see you here, Gulam, right? There's a certain psychology to see on what this thing is called a pullback support. Okay, now this first and foremost, you need to look for these kind of significant levels to call to draw a support and resistance. Okay, you notice that when you change the different time frames, it starts to look, things get a little bit more granular, right? You can see this, right? You got this part over here, you got this part over here, this part over here, maybe this part, but okay, maybe not this part, right? But so these are the key levels that you're looking at. Look for significant levels. We are not going to place an emphasis on this movement here, this movement. These are not key levels, right? Look at this movement. It's not important. No one's going to look at these levels, and that's why it's not going to be that effective when you use them in trading. Nice to see you here, Benjamin. Right. So yeah, so this is the first thing that I want to let you know is that when you're trading, there we go. Look for the significant levels, okay? Look for the significant levels, okay? Ignore the insignificant ones, okay? There are a couple of, so when you find the significant levels, that is where there are the single swings they look at, right? So the thing about single swings is that they are not very strong, okay? So a single swing low over here, a single swing high over here. By themselves, they are not very strong. Okay, Natalia, maybe I'll take a look at gold in my next example, right? Yeah, that's significant. If it's just a single swing high or a single swing low, it is not going to be very strong. What you want to look out for, rather, is you want to look out for multiple swings, right? 1 swing, 2 swings, 3 swings, 4 swings. Man, that's a very nice level. Right, 4 of them lining up together, and what I like to do is I like to highlight it and becomes an area for you to look at. Can you see that? Right, I'm just going to erase it for you one more time. Right, how do I erase my drawings? Erase all in constant. Yes, there we go. Right, so it's always the case when you have 1 swing, you try to go further back and see how far back it can go, how far back it can go, how far back it can go. Don't worry if like you have the wick up here. You can see this is the wick up here. This is the wick up here. Don't worry if the price is not lining up at exactly at the same level. So sometimes people get too absorbed by looking at the exact level, right? The single price point, and they think that has, support and resistance is based on a single price. The truth is support and resistance work based on areas, right? So in this case, you notice that once I draw that, I will highlight this area. Right, you notice I highlight a big area there, right? So I highlight that is the area of support, that is the area of resistance we're looking at. Okay, so now let's see if you can take a example, a look maybe at gold, or maybe if you want, I like to look at the futures, but you can look at XAU USD, and we can look at gold over here. Is there any multiple swing high or swing lows you can look at right away? Right? Yes. Oops, right, one thing here. Give me a second. Okay, so I was just looking at something here. So this is a big an example of a nice big level, nice big swing high, right? Because why is it nice? Because there's one big level over here and there's another big level over here. 2 major levels that you can look at. So the next thing you're going to ask me is, okay, so where's the support? Right, so okay, that's a nice, so this is what I call fairly nice bounce, right? I would consider it as one bounce, but because in this example it bounced off at exactly the same spot, And this was another nice big bounce over here. This bounce, I'm not too keen of it. It's kind of small. It's kind of small. I much prefer this bounce and this bounce over here, right? So a trick on identifying how significant a bounce is, how significant a swing high or swing low is actually to see how many bars to the left and how many bars to the right, you know, is it below off. So in this case, right, this is a major bounce, right? This case, right, the last time price revisited here, you know, you can see is from here and then it keeps going on, right? This one is all the way on. You can see how such a swing level usually has a lot of bars on the right and on the left, on the right and on the left. In this case, right, if you have a small little swing high, swing low here, yeah, sure, you know, on the right is great, but on the left, you know, it very quickly breaks down. You know, you can see it very quickly the levels get broken. So to tell whether a swing high or swing low is significant, usually you'll see how big, how much on the left and on the right is like clear space. All right. So in this case, right, for gold, we see that there's a really fairly nice support level over here, right? There's a nice support level. I'm going to put it in green, right? And that's the important thing that you need to take note of, right? So why price bounce off here was because, you know, people saw that, you know, it bounced up one, bounced up twice, it's coming down again, right? And that's why they are confident that you bounce up. The more levels that line up nicely in a horizontal level, the higher the chance that price is going to make, the stronger the support level, and hence the higher the chance is price is going to make a nice bounce. Okay, the higher the chance is price is going to make a nice bounce. So we have the support and resistance levels over here. Later I'll be showing you perhaps some of the trend lines I can look, because I don't want to dive too much into the different forms of analysis, but I can already see so-called a trend line here. You can see different kind of trend lines, potential breakout. This is a little bit more advanced form of analysis, right? So we could be seeing price come all the way down to here if it breaks this level over here. I will explain that to you later on how it works, because I do see overlap levels and pullback levels, which I will need to explain to you in this webinar before I touch on them. Otherwise, you'll be a little bit too confusing. Okay, now let's go back to this. All right, so multiple swings is effective. That is simple, right? You know, swing high, swing lows, multiple swings, easy stuff. Okay, what I do want to let you know is one of the strongest form of support and resistance is called the pullback. Okay, one of the strongest form of support and resistance is called the pullback. What is the pullback? Okay, this is a pullback. Let me explain to you the psychology of a pullback. Okay, psychology of a pullback. You know, you got price. Okay, imagine price touch this level, it dropped once. Touch this level, it drops the second time. Touch this level, it drops the third time, right? And now price is over here. When price is over here, a lot of people are thinking that it will drop again, right? Because it makes sense. Price failed to break up once, failed to break up twice, failed to break up 3 times. Now it's back there, they're expecting it to drop down. The problem is that if price suddenly breaks up over here, it starts to go up. As you can see, you know, there was a breakout. Okay, there's a breakout. Price is going up. And those people, everyone who was short over here, meaning they were selling, everyone that was selling over here, they suddenly get taken for a ride, right? They get taken for a ride. It goes up, it goes up, it goes up, right? They start questioning the meaning of their life. They're like, oh man, I should have used a tighter stop loss, right? It's a terrible time now. You know, I'm suffering so much losses. It goes up, it goes up. You know, they start cursing their luck. They start thinking that, swear that they'll never trade again until it reaches here. Then it starts reverse, right? So now there is some light at the end of the tunnel, right? They are still holding on to their short position over here, right? This is their short position, meaning that this is the selling position that they had previously. It starts going down, it starts going down, it starts going down, it starts going down, right? And, you know, all the while they're holding on to their trades, right? They are seeing light at the end of the tunnel. And when it reaches here, the initial level where price broke out from, what do you think they are going to do? what do you think most people are going to do? Are they going to hold on to their position, or are they going to close off their position? Okay, Kramer, I see that you have a question. I switched to line graph instead. Can I say yes, looking at line graphs might work pretty well too, Kramer. We look at it in a bit, right? So when the teller say close the position, and that is exactly correct. You would close the position, right? You close the position, right? And you get out of this trade. You close this position and you get out of this trade. So when you close the position, a short trade, to close a short trade, you need to buy, right? You need to buy an equivalent position to close a short trade. So everyone who was short over here will start to buy, and that usually causes the initial bit of momentum to come in to cause the price to bounce up. That is why it's called the pullback support over here. Okay, it's one of my favorite, right? One of my favorite styles of trading. The pullback support is so effective, right? Once it comes back down to here, right? Price, everyone who has been freaking out since they've been short over here, they've been taken for a while, right? When it comes back to here, they finally close off their positions, and it gives that injection, right? It gives an injection of buy orders that come in fast and quick, that pushes price all the way up, right? And that is what I mean by the pullback support. Price is, where's my mouse, right? Price is essentially pulling back, right? It's pulling back to the support level. That's why it's called a pullback. And support, of course, means that it's below price. Now, people always get confused between the difference between support and resistance. Always remember, if you're a human being, right? Or what do I mean if you are a human being? Everyone here is a human being, right? You are standing on support. The floor is supporting your weight. The chair that you're sitting on is supporting your weight. You for something to support you, it needs to be, below you, right? You are supporting someone, you're holding the person, you're supporting them, right? So no one ever says that the floor is resisting my weight, right? If you think about it, it's very weird. The floor is supporting my weight, the chair is supporting my weight. So remember, support is always below you. Do not confuse this terminology, okay? The floor is supporting you. The resistance is when you push against something. Resistance is usually above you. The ceiling, you're pushing against the ceiling. You'll not say that, oh, the ceiling is supporting me. It sounds a bit funny when you say it that way, right? The ceiling is supporting me, right? But you're pushing against the ceiling. You're saying the ceiling, is resisting me. This thing is resisting me. You're pushing against something is resisting, right? So resistance is always above price, okay? Support is always below price. Important considerations that you need to take, okay? So the opposite is true when it comes to pullback resistance, right? Pullback resistance, you can see how price bounce once, price bounce twice, price bounce 3 times, right? It doesn't need to be 3 times. Usually once is good enough. One good swing low is good enough. I'll be showing you what I mean by that later. One good swing low is good enough, right? When price breaks it, right, there's a whole bunch of people who thought that it was going up, right? There's a whole bunch of people that thought that it was going up. Now it's dropping. They are being taken on one hell of a ride, right? They're like, oh, shucks, man. Price is dropping. It's terrible. Man, I should never have held on to the position. I should have closed it out. I should have used a stop loss, right? They start questioning the meaning of life, right? It goes low, and then it starts to turn around. When it starts to turn around and it starts coming back up to here, once again, once it reaches the entry, the level where it broke out from over here, as you can see, once it reaches the level where it broke out from, that is where they who were holding onto their buy positions, remember, initially they were holding onto buy positions, they would be closing off their trades. To close off their trades, they would need to sell, right? Need to sell. When you sell, that's where price comes down, right? You have that nice bit of momentum, injection of selling orders that helps you push price lower, okay? Now, this is an example of how it looks like, right? So we got a swing low. You can see a very nice significant level here, right? We highlight this as a main resistance level, okay? I mean, you could line it up with Fibonacci. This is slightly more advanced where you can line it up with different stuff, right? And of course, let's just see. This is a second Fibonacci level. You can line it up. I will explain this later. This is how you can fine tune and give yourself very, very high probability setups. Let me see if this actually fast forwards into an example. You can see how price reaches this level, touches it, drops down. Okay, that is what you're looking for. Okay, sure. In this example, I show, right, just in this example, what I'm showing is that I show this resistance level over here. Over time, I'm going to show you how you can combine maybe a trend line channel. I'm going to show you how you can combine an Ichimoku cloud on top. I'm going to show you how to combine Fibonacci. I'm going to show you how to combine Fibonacci projections. Right, I'm going to show you how to combine Fibonacci expansions, extensions, correlation, throw in a whole bunch of stuff, and you improve your chances of being profitable. Right, that is that. If you ask me, right, a lot of people ask me, is there a single best indicator? Is there a single best strategy that works very well? There isn't. In fact, it's what we call the confluence. You're looking for confluence over here. C-O-N. Confluence also means combination. Right. Well, my handwriting skills is terrible. I'm sorry. Right. You're looking for a combination of indicators to all agree that price is going in a certain direction. In this case, you know, I got the resistance, you know, I got the 61.8, I got 38.2, I got all the Fibonacci, all telling me that price is working out very nicely. Price might reverse from there. And that is how I know that I have a high probability trading setup. We'll learn more of that over time in the VIP room. Yes, for those of you guys who are here, I will share with you how you can get into the VIP room. The IronFX VIP room, which we are launching, is pretty fun. It's a pretty nice place to be. You will get direct access to me and the pool, and my pool of prop traders. Very nice, because you get to ask some really nice questions. You can practice your technical analysis there, and I can teach you, I can show you whether you're doing it right or doing it wrong. Okay. Now the next thing I want to show you, right? Next thing I want to show you is overlap support and overlap resistance. Okay. Bam. We are now here. Oh wait, let me see if I can show you. I'll show you an example of a pullback working very nicely. Okay, let me see if I can show you an example of a pullback working nicely. Maybe let's toggle around a bit. Okay, let's go daily analysis. Okay, perfect example, guys. Perfect example over here. Now, Marky, your question that you can put there. Yes, closing. If you do line chart, it works well too. Right, this is the pullback that I was looking for. You look at candlestick, it works equally well. Right, now guys, let me show you what I mean by this pullback. Okay, we can agree, right? We can both agree that we have a very, very nice little bounce over here. This is a pretty significant bounce, right? It's a pretty significant bounce. Now we got price that's coming down here, price that's coming down to here. When it reaches down to here, what do you expect is going to happen? Price might bounce up from here, right? Everyone is thinking, yeah, you know, last time price went down there, it bounced up pretty strongly. You know, it's probably going to happen again. Okay, so we have price going down, down, down. It's down there. What happens? Holy smokes, it breaks. Okay, it breaks. People who are long, they start panicking. Right, they're long, start panicking, and now you can see price going down. What is happening to the people who got into a long position over here? What is happening to the people who got into a long position over here? They are freaking out, right? They are freaking out. They are thinking that, oh man, I thought the bounce was going to happen, right? I mean, everything pointed, you know, that the signs were all saying that price was going to bounce here. But the moment this happened, price came down to here. They're holding on to their long positions, right? So remember, they're holding on to their long positions now. And of course, they are freaking out. What we do as good traders is that when people panic, we stay calm. Okay, people panic, we stay calm. What happens after that? Okay, what happens after that? Just let me erase my drawings a bit. Whoa, I draw a lot on this chart. What happens after that is that price, then you can see, okay, nice, one strong bar that spikes up to here. Now, what do you think people are going to do in this circumstance. The moment they see this, people are freaking out and they're getting out of their position, right? Then you can see almost in the next bar. Can you see that? In the next bar, this is how intense the selling can be sometimes. In the next bar, everyone who was long over here, they just freaked out and they sold and they got rid of everything. Maybe I can show you on the 4-hour chart. It might look slightly easier, right? So I'm going to go back to here. Right, remember this is a, where is my, yeah, this is a nice swing low support, as you can see over here. The moment price breaks out, bam, bam, down, 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 it goes up, comes back up to here, right? Everyone who was short, who was long, thinking that price might bounce from here, they get out of the trade, right? They get out of the trade, and it causes prices to just plummet once again. Okay. Plummet once again. How strong is such a pullback? Usually, look at this, right? It goes down, it gets, people get off the trade, and this is where you make the money. This is where you make the money. When people are panic selling over here, you start to short and you start to make some money. Okay, you start to short and you start to make some money. All right, if you guys got questions on this approach, please send it through so I know I can answer them. Yeah, but this, you will see this happen a lot in varying degrees. Okay, let me show you another shorter term example. Just this move over here, right? Just this move over here, this level over here. Replay, I'm going to show it up, sorry, replay feature over here. Can see that price, you know, bounce up nicely. It's a pretty significant bounce. Price is now breaking it. Right, breaking it, breaking down, 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 down. Man, the people who are long over here are being taken for one hell of a ride, right? Being taken for one hell of a ride. Now, then what happens when price? Look at it. Can you see that? It shoots up one touch, right? And it usually drops very strong. There's even another spike up here. Right, and people are still freaking out. People are still freaking out. These were for the slightly later comers, the second spike. But I can see how people freak out and people close the trade pretty fast. The important thing, right, is identifying this nice swing. The more you can identify this, the more accurate you can identify this swing, the more accurate your reversals can be, your pullback resistance and pullback support can be. Okay, it's pretty fun, right? Honestly, it's pretty fun. It's a really, really great way to trade. In this example, other things that I would have considered, right? I would have considered maybe a trend line breakout, right? Breakout pullback. I might have considered Fibonacci retracement. Notice how price react off the 50%, 38% Fibonacci retracement perfectly. Many different ways that you can really improve your technical analysis, right? Your style of trading, your probability of your trades being correct. And that is where, you know, what I'm teaching you today is only theory, right? The value comes when you practice it, guys. Always be practicing. How do you, I'm just going to interrupt this session right here to send you to a particular link. The link is vip.ironfx.com. This is the link that you want to go to, right? It's the IronFX VIP trading room run by me, run by my fellow prop traders. It's as long as you have an IronFX account, you will get access to this room, right? As long as you have an IronFX account, you get access to this room. And let me show you the beautiful thing here, right? So for example, Natalia, right? You might be looking, right, at gold. If you have a question on gold, you can come in here and you can speak to me directly, right? Maybe this is a 5-minute chart. Let's just say you're on the 1-hour chart, right? You're on the 1-hour chart and you see this like overlap resistance over here. Let me see. Actually, you see this overlap resistance that comes all the way back to here. You can come in here and you can go, hey Desmond, right? What do you think of this resistance? What resistance am I referring to? I just need to highlight the text that I just drew. I can click this little button called link object to text. Click on it. I can just click the object that I just drew, right? I can click on this one over here. You notice that it lights up. And I click confirm. So when you send the message through, right, how it looks like, right? So I'm looking at a message like, oh, wow, someone has just mentioned me over here. Hey, Desmond, what do you think of this resistance? What resistance are you referring to? I can hover my mouse over it, and you can see it lights up exactly on the chart. So this is where you can practice your analysis. You can ask me questions very clearly. I can jump in over here. I say, okay, so this is the resistance level that you're looking at. Well, it happens maybe. It's not a 30%, say. I might wait for the 38% retracement, right? So same thing, I can highlight 38% retracement and link it. I know it's a little bit hard to see, but I can link it there. And you're like, oh, what is Desmond referring to? What 38% retracement? You hover your mouse over it, it's like, oh, he's referring to this Fibonacci retracement, right? So this is a great place for you to practice your analysis. We have forex, we got commodities, we got indices. We'll be adding in crypto, right? All the different kind of charts will be here. And anytime you have a question, just go in, ping me, and practice your trading. Okay, you might be looking at this and you're like, hey Desmond, is this a double bottom? Right? What's a double bottom looking at? Is this like is this a double bottom kind of formation that we're looking at? Same thing, highlight, link object to text, just select whatever you just drew and you send it through, right? Because when I look at it, I'm like, what is the double bottom you're referring to? Hover my mouse over it. Oh yeah, it kind of looks like a double bottom. Then I can, we can guide you, say, yep, it looks like a double bottom. Price might bounce up to this level over here. You can take your profit there. If you do this well, you can be this is what IronFX has done to get the VIP room here. It's not easy, right? The very fact that you can get, I believe it's a limited time promotion that just being able to have as long as you have an IronFX account, you will get access to here, right? That is something that I don't think the promotion will last for a long time, right? What you need to know is that when you are in the IronFX room, I'm going to show you, right? Some people might be a little bit confused because when you come into here, right? I'm just going to show you, you will be in this thing called a preview mode, okay? In the preview mode, you just need to click on join IronFX server, register. I'm going to show you really quickly. Let me see if I can just register something really quick over here for the tree. I think we have enabled registration. You need to agree to the disclaimers, right? You join the server. Now, when you join, you notice that there are no channels on the site. What you need to do is to click on this thing called request access, all right? This key thing over here. Click on request access. Please attach proof of your IronFX live account to get access. You just need to click request to join channel, right? Let me in, right? Maybe you just need to say message, let me in. You attach a screenshot of your account. Let's just say I'm going to attach a screenshot of, let me just attach a screenshot, a random screenshot. But maybe, of course, the screenshot of your IronFX account. You send in the request, right? Then we tell you that your request is pending approval. I will come in here. I will see your request. All right, we got Desmond requesting, okay? He has attached the relevant proof. Accept him, and I'll give you like a gold here, and it's done. And when that is done, how it looks like is that you will then have access to all the different channels. Very simple, right? And we have some little congratulations. We teach you a little bit of stuff on how to link stuff over here, and there we go, right? It's a really easy way, right? It's a really easy way to get you to get in. All right. Now I don't want to deviate too much from our original explanations, but my one bit of advice, if I can, is that this is a very limited time promotion that IronFX is running. If you have an account, if you don't have an account, go register for one, right? But if you have one, just come in here, request access to join, and lock in your position, because I think sooner or later they might be increasing the requirement just to get access to it. So once you lock in your position, lock in your entry into this VIP room, right? That'll be great. Okay, now let's go back. One thing I want to teach you guys, next thing is the overlap. So previously we were talking about pullback. Now we're going to talk about overlap. Okay, what exactly is overlap? Now, what exactly is overlap? Overlap is what happens when price bounces from a pullback. So remember, we have a nice big resistance over here, right? Price breaks out. When it finally pulls back, it pulls back here. When the pullback bounces, it becomes an overlap. Okay, when the pullback bounces over here, it becomes an overlap. Got it? So that means price has respected one time from the bottom and one time from the top. Overlaps are really good because you see in this example, we got a nice reaction here. We got a nice reaction here. This is then an overlap, right? These overlaps are very useful because whenever price reaches it again, it usually, right? It usually reverses, right? As you can see, it usually reverses over here. Bam, it goes down nicely. Okay, overlaps are a great way to trade. It's one of my favorite ways to trade. And I'll be showing you, we'll be practicing a little bit together to see how we can identify overlaps. Okay, then we come in over here, we go into the charts. One thing which I wanted to show you guys is actually on gold, right? So I think it was XAU USD. Natalia was asking, right? Let's see it over here. Overlap. An overlap level that you can look at. In this example, there's this overlap that you can look at. Okay, you will notice how price reacted very nicely. Oh, sorry. Reacted very nicely one time from here, you know, and then it bounced very nicely one time from here. And then, you know, you can see that when price went through, it touched, it go down, it went up, it go down, it went up, it go down, it went up, it go down, right? Because it's an overlap resistance. Overlap levels are very good, but only if you know how to identify them properly. Okay, overlap levels are amazing, but yeah, the important thing is that you need to be able to identify them properly. Okay. So Natalia's asking, right? Just in terms of analyzing gold, what do we expect on gold? Okay, what do we expect on gold? Right? Let me see. I like to put rate as resistance, so I'm going to put this as a resistance area. This is as a support level. A little bit of a trend line breakout over here. Could it be a bit of a channel? Maybe we got a little bit of a channel over here. Descending channel. Yep, we got something like a descending channel over here. Okay, what is the Ichimoku telling us? Ichimoku is telling us that we got a little bit of bearish pressure pushing prices down. My bias, right? My bias is that this is the key level that needs to be broken. This is the key level that needs to be broken. If prices breaks this level, right, I would trigger a sell entry. Maybe I will consider a sell entry to push prices maybe all the way down to here, to a next key support level. But this level needs to be broken first to trigger the move down. Of course, guys, remember, this is not trading advice, right? This is not trading recommendation, but my analysis on this is that what you definitely need this level to be broken first. With the bearish channel that is pushing prices down, with the bearish Ichimoku cloud that is pushing prices down, right? You should be able to have prices being pushed all the way down to the 1678 level, but only if prices close below the 1788 level. Okay, guys, we'll be taking some time to go through some analysis, some examples, right? If there are particular instruments you want me to look at, let me know, right? So whether it's gold, whether it's oil, whether it's silver, euro dollar, right? Let me know if there are any particular charts that you want me to look at. I'm just going to take this chance to show you a couple of instruments, right? And maybe I can to show you how overlap support, overlap resistance works. Okay. You can see over here that this is a very nice pullback turn overlap. Okay. Now let me show you the replay. Look at this. Price bounce off once, bounce off twice. Very nice. What do we say when this happens? When this happens, people are thinking that prices is going up, right? People are thinking that it's going up, right? Just give me a second. Yeah, people think that it's going up. All right. Now, when prices break and it starts to go down, yeah, that's where people start freaking out a bit, right? People start freaking out. It goes down, but it comes back up. Okay, amazing. It's back up. And what happens? This is then what we call a pullback resistance, right? Remember, once prices break out from here and it comes back up to here, this is what we call a pullback resistance. We expect prices to go down from there, right? What happens? Yeah, it comes back up. Yeah, bam, it goes down. It goes down. It goes down. Okay, so this is the pullback resistance that we're looking at. Now that this resistance happened, it is now called an overlap, right? It's now called overlap resistance. Key level to look out for, right? I mean, we go on and we go on and we go on. So I have no idea when it comes back to retest it again, right? I think it might be retesting it soon. Whoa, it's a long time. I need to click on it so much. Okay, it's coming back up to retest it. Let's see, let's see. Yeah, I think it retested it this area over here because of this spike, right? So it retested this area. It goes down again. This is the overlap resistance that you can see in action over here, right? Very nice move. Okay, let me just cancel the bar replay. You can see this was the overlap, and then it comes back up to here again. Same thing, overlap resistance we're looking at, right? Touch it and then reverse. Very, very effective. Okay, this kind of setups are very, very effective, right? And I want you to train your eye to be able to see it, right? I want you to train your eye to be able to see it, because first and foremost, when it comes to trading, support and resistance, right, it stands almost as one of the strongest things that you can use, right? In our next session, I'll be teaching you trend lines. I'll be teaching you trend lines. I'll be teaching you channels. I'll be teaching you how you can improve the probability of your setups being correct. Okay, you can improve the probability of your setups being correct. Let me see if I have an example where I can show you what it means by improving the probability of your setups. Okay, let's just say we have a resistance level over here, right? This is what I'm going to teach you guys next. Let's say I have a resistance level over here, right? This is the overlap resistance that we have identified. Usually in my trading, now guys, trading is not binary. Trading is not 0, 1, meaning 0 means you don't take a trade, 1 means you take a trade. This is not what trading is like. Trading is 0, 1, or 2, or 3, or 4, or 5, right? So do I risk, how much should I risk on a trade? Well, it's not 1 to 5%, but is, do I have 1? Are there 2 checkboxes, 3 checkboxes, 4 checkboxes, 5 checkboxes? How many checkboxes are there to suggest that it's a good trade? Okay, the more checkboxes, so maybe if I have 5 checkboxes or 4 checkboxes, I might risk like 2% of my trade, right? If I have 2 checkboxes, maybe I risk 1% of my trade, right? So it's about finding how nice a setup it is. Okay, if I have 1 checkbox, maybe I risk 0% on my trade. Okay, so just remember we have a checkbox system over here. Okay, let me just erase everything, draw this thing over here. Let me show you what it means to be like let me just see resistance area over here. We got we got a resistance area over here. Okay, now let's have different checkboxes by the side over here. Okay, let's see how nice this setup might have been. Okay, we got 1 checkbox, right? We got 2 checkbox, we got 3 checkboxes, and I'll explain to you what they mean later. Okay, overlap resistance is 1 checkbox. I call it overlap, right? Excuse my terrible writing. We got overlap resistance. Next thing, I draw a Fibonacci retracement. Maybe I do a 1273. 127%. I know you can't really see it, but 127% is another is a Fibonacci level. I have another checkbox over here. I'll do another Fibonacci retracement all the way from the top all the way down, right? I pull up the template. maybe I have 61.8% that is slightly higher. Not that effective, but it's fine. I have there we go. I know you can't really see it. I'm going to erase this, but there is a negative 27% that is over here. So we got negative 27. That's great. 3 check boxes. And the last one, maybe you take Fibonacci. I know I'm using a lot of Fibonacci here. I'll teach you guys how to use it in a bit, right? And I noticed that the 100% projection is over there. So I got the 100% projection. I got 4 of it. 4 of it, if I got 4 ticks, maybe I'm risking 2% of my entire account on this trade. Okay, we see prices go up, 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 up. So we got the whole area over here as a confluence area, right? It comes up, it touches it, right? And then it goes all the way down. So that is how you get into a high probability trade. You don't just trade one thing by itself, right? You don't just trade one thing by itself. I believe you might have been able to use a trend line. Trend line wouldn't have touched it, it's fine, right? But you can see that when it comes to trading, you need to see what is the good levels that you're seeing over here. The more, the better. Okay, the more, the better. And I'll be showing you how to, today I've shown you how to use the overlap and the pullback. Over time, I'll be showing you the Fibonacci extensions, the Fibonacci retracements, the Fibonacci projections. I'll be showing you how to use the trend lines. I'll be showing you how to use channels. I'll be showing you how to use Ichimoku. I'll be showing you how to use indicators like the stochastic, maybe look for divergence over here, right? I'll be showing you a lot of things on how to be a better trader over time, right? It's actually pretty exciting because when you know how to do this right, you, like I say, guys, it's a matter of even financial freedom, right? If you know how to trade profitably, you are literally printing money out of thin air. Okay, literally printing money out of thin air.
My name is Emily and welcome to our daily trading tips. The financial markets tend to change all the time. A good trader should either adjust his trading to reflect this change or can place trades and wait for the market to move in the wanted direction. Having different strategies and ideas on the side can increase your winning possibilities as it forces you to think in terms of different time frames and trading sessions. Some of the best forex traders in the world are excellent at mixing up a number of strategies. Basically, you should be able to change your approach with the way the market changes. Embrace change, stand in the midst of it. This will make you wiser and tougher as it will challenge you. Sharp moves in forex markets are big surprises. If everyone expects something to happen, they position themselves before the event. Basically, if the event actually plays out as expected, very little may happen during and afterwards in terms of market action. But if very few expect something to happen and it does, we usually see sharp moves in the following minutes, hours, days, as investors reevaluate their views and reposition accordingly. In such instances, positions in the wrong direction incur losses and sometimes extensive ones. It would be advisable, in order to protect your funds, to use a stop loss when placing an order, or diversify your positions in order to lighten losses. A strategy doesn't need to win all the time to be profitable. Many traders only win 50 to 60% of their trades. However, they make more on their winnings than they lose on their losses. Make sure the risk on each trade is limited to a specific percentage of the account and that entry and exit methods are clearly defined and written down. That way, they'll be easy to remember and keep track of what works for you. It would be advisable to start out with a smaller investment volume so that the risks are limited, and also be sure to use stop loss and take profit pending orders. Should you be about to begin trading, it's expected that you may incur more losses than wins. Should they come up, consider them as an investment to accumulate experience, because that experience is to enable you to be more profitable in the future. Thank you so much for joining us today, guys. Stay tuned for our tomorrow's live. Bye-bye.